Welcome back to my channel, fellow investors. In this video, I'm going to cover Cigna. This is a healthcare payer that has been doing really well. Year to date, the company is up 17%. They pay a small dividend. And overall, I view this company as being highly discounted. I've been investing into Cigna, building up a position, and so far, so good. I wanted to analyze the company, share with you my analysis, and get to an endpoint where I decide whether I should buy more shares, hold, or even sell my shares on Cigna. I'll take a look at their financial statements, their fundamentals. I'll put the company through a free cash flow discount model to arrive at a fair value of the stock based on their free cash flows. I'll also look at their earnings per share and determine a fair value based on earnings per share. I'll combine those two to arrive at what I think the company is worth to see if I'm getting a discount compared to the current stock price of Cigna. Cigna is a really good company. It's a healthcare payer. And about a year ago, they were trying to acquire Humana, and that acquisition fell apart. When it did so, investors really liked that. Humana was troubled, and they continued to be troubled. So that was good news that they didn't acquire Humana. Overall, healthcare is a space that I like because healthcare can weather a recession. It's always a need. Whether we have a good economy or a bad economy, people need healthcare. They need to buy health insurance and they need to go to the doctor and get the healthcare that they need. So it's good to have healthcare companies in my portfolio so that I could have long-term growth with some stability. Now let's take a look at Cigna and look at the fundamentals, look at where the stock price has been, and then value the company. Cigna has a market cap of $99.95 billion. It's had a very nice annual return of 37%, and year to date, it's up 17%. The company pays a decent dividend at 1.59%. Overall, it buys back shares, so the stock price appreciation is where the return is for an investor. The forward PE is nice and low at 12. Really nice forward PE. There's a strong buy sentiment from multiple analysts that cover the stock, and collectively, they have a price target average that is 4.3% higher than the current stock price. Revenues have been growing for Cigna over the last 4 years, and that's excellent. This good growth rate over 4 years shows that the management team is doing a really good job, that the products that Cigna produces or provides are really favorable and desirable by consumers. Overall, I really like their growth in the income statement. It really says a lot about their business. Growth has also existed in the statement of cash flows. Cash from operations has really jumped up. It jumped up 36% if you compare 2022 to 2023. And the year before, free cash flow from operations went up 20%. So excellent growth in cash from operations from Cigna. Looking at the balance sheet, the company has debt to EBITDA of 3.16, just slightly above where I like to see a company, which is 3 or under. Overall, I'm not too concerned with their balance sheet, especially since they're generating so much free cash flow. Earnings per share has been really growing for Cigna. In 2024, it's expected they're going to grow their earnings per share by more than 60%. That's excellent. And it's going to continue on. In 2025, it's expected that earnings per share will be up another 12%. And in 26, up another 11%. That's just exceptional earnings per share growth. Earnings per share will more than double over the next 24 months. The dividend is 1.59, and the dividend payout ratio is 32%. So it's nice and safe. And that's typical of healthcare payers. They don't pay very high dividends. They usually pay kind of a smaller dividend compared to other companies like a pharmaceutical company, but they consistently pay it and they consistently grow it. To arrive at a value that I believe Cigna is worth, I looked at their free cash flows closely, and that's cash from operations minus capital expenditures. This year, they have really good cash flow, so it was a really good starting point. And I grew those cash flows by about 7%. That is a nice conservative growth rate. I added the cash on the balance sheet and took away debt, and I arrived at what I believe a fair price for the stock based on their cash flows is $626. But the stock price is priced at $352. So the cash flow value of this company is much higher. It's 78% higher than the current stock price. So there's a lot of room to run if you look at free cash flows for Cigna. Looking at earnings per share, again, earnings per share are really expanding quickly, and they have a very low forward PE. Using the guidance that Cigna has provided, which is 28 $8.25 per share is what they expect they're going to do in earnings per share this year at a 18% multiple. I get a value based on earnings per share of $416 per share. The price of the stock's $352. So using earnings per share, I get an 18% discount. And the growth rates I'm using on earnings per share are conservative, but I think that the company could do far better than that. When I combine the two, I arrive at a 58% discount on Cigna. This is one of the reasons why I really like the stock, is that they just have a very nice discount. The markets really notice them. They're buying up the stock. And overall, it just looks like a positive situation. So should I buy more shares, just hold my shares, or even sell my shares in Cigna? Well, I'm going to go through and look at three areas of the company: the company itself, balance sheet, and the discount. First, let's talk about the company. I think the company is in an industry that I really like. Healthcare is one of those, steady growth, accumulating value in the stock type of industries. If you look at United Healthcare, that's a great example of how United Healthcare has really expanded value for investors. Cigna is much smaller than United Healthcare, but it's following the same path of a United. It's at $100 billion market cap. I could see it expand to 200 billion. They have the numbers, they have the revenue, and so forth. The management team's doing a great job. I guess they were lucky that they didn't acquire Humana, because based on the Humana earnings, the Humana business is in a lot of trouble. That could have just maybe spoiled the overall metric combination for Cigna if they had acquired them. So overall, I really like the industry. I think the company is in a really good spot. Management team is doing a good job. So I really like the company perspective. Now let's talk about the balance sheet. The balance sheet does concern me that they're slightly above 3 with regards to debt to EBITDA. Now the company does generate a lot of free cash, and I'm going to give them a passing grade, but it should not get any worse. If anything, I want that debt to EBITDA ratio to come down below 3. Cigna has the cash to do that, so I expect that should happen in a few quarters. If it doesn't and it gets worse, I got to investigate and find out why. What's the reason why that metric keeps getting wrong or worse? So I'll continue to look at the balance sheet, but for now, I'm okay with it. The last item is discount, and Cigna provides a really nice discount. That said, I'm going to be buying more shares of Cigna. It's the one healthcare stock that I'm very bullish around, and I'm buying just about any day where it's down in stock price, even just trading even, I'm buying more shares to average in my acquisition price in Cigna and buy a really nice position of Cigna. A few years back, I invested in United Healthcare. This is 6 years ago. And over the course of 3-4 years, I did really well with United Healthcare. And the stock just kept going up and up and up. It got to a point where I felt like United Healthcare was selling at a premium. And I decided to switch horses and sold off my United Healthcare. Very successful investment. And I feel like this may be the same situation where Cigna really continues to grow, really go up in stock price, and really reward me over time. So it'll be good to buy into Cigna going forward. That's my video on Cigna. I hope you found it interesting, and I really appreciate you watching.